All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla Inc. actually broke through resistance, hit new highs here of 430 and 57 cents, and slightly started to fall, tried to fight back by the bulls, and it started to fall again, and we are at 422.05. So there's some important things. We're going to look at this very narrow, and then we're going to talk about it a little bit broader. But the bulls have been able to manage to stay above the 50-day moving average. The 50-day moving average is 419.88. I'd write that down, see if I can get to that number exactly when we zoom in. But 419.88 lets us know on what side of the chart we're in, if the bears are in control or if the bulls are in control. So it's super important to keep that in mind and pay close attention to how close this is getting to it or how it's pulling further away from it, getting deeper into bullish territory. So let's zoom in here and get our resistance and supports to their new locations. And apart from that, like I said, we're going to talk about this a little bit broader. So the 50-day moving average, again, is 419.88. Let's see if I can land exactly on it. Keeps jumping around 91, 97, and 87 and 84, but it's 419.88. The support level after the support level we're about to talk about in a much more narrow stretch to have a lot more of a focus on how quickly this is moving down and so forth is right here, slightly below that 50-day moving average, which is 419.72. Super important to keep that in mind. 419.72 is an important number to pay close attention to if this breaks through the 50-day moving average and starts getting closer to 419.72, and how quickly is it hitting newer lows. It's super important to watch how quickly it's hitting newer lows. Now, on the other hand, let's talk about the bulls here. So the bulls hit a high of 430 and 49 cents. If you want to just round that up to 50, it's 430 and 50 cents. Let's just round it up to pay a round number right there and pay close attention to that. Now, 430 and 50 cents needs to be broken through by the bulls so they can hit newer highs and new resistance levels and pull further away in this upward direction. But before getting there, they need to break through the first resistance level, and that resistance level is 425.82. Super important for the bulls to break through that. 425.82 needs to be broken through, turn into a support, and the bulls can pull away in an upward direction, getting closer to that 430 range and 50 cents to break away further from the 50-day moving average, deeper into bullish territory. So the first step for the bulls to continue the momentum, and they have to break through this, is 425.82. By turning 425.82 into a support, they can pull away from the 50-day moving average, reaching newer highs. On the other hand, we have what the bears want, and we're not that far from it. And the bears are currently pulling this one down as we speak in these after hours and the last couple hours of the day, and they have it at 422.05. For the bears to break through support, it is 421.13. If the bears accomplish that, they're going to try to get closer to the 50-day moving average to get back into bearish territory. So I want to state to all investors, pay very close attention to how this stock is reacting, if it breaks through support, and how quickly is it hitting newer lows and getting closer to the 50-day moving average, or how quickly does it cross through both of them and end up in bearish territory. Now, the tug of war will be interesting between the bulls and the bears, so that's why you need to pay very close attention how quickly this is moving in which direction, because if the bears are tearing this one down fairly quickly, there's two things that can happen. They continue to tear it down and pull away from the 50-day moving average in a downward direction, or the bulls can reappear and bring this one back up into bullish territory again. So pay very close attention to the behavior of this stock. Put your 1 minute, your 5 minute, your 15-minute charts, and the inflow and the outflows of who is dominating by volume. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.